Folks, Dan Frio here, the rate update. This morning, we're going to go over the inflation numbers, and they continue to be dismal. We're going to show how they're affecting the MBS market and mortgage rates. So if you're new to the channel, my name is Dan Frio. I do the rate update every day to make sure you're educated and informed about everything real estate, especially in financing. So if you're new to the channel, please don't forget to subscribe down below. We have a lot of content down there as well, but let's get to it. So let's get on to it. New reports out today. The CPI showing inflation is higher than we thought, and there's an area that might be a concern to you. So let's get over to the headlines. Let me get my head out of the way. We see now, we start with CNBC. Consumers' fear over inflation hit a record high in March, New York Fed survey says. So let's look at the calendar that came out today, the economic calendar. We like to focus in on this to see what's coming up in the news that may, or should even put it this way, should affect mortgage rates. Well, then one piece of information that's coming out tomorrow is Tuesday's core CPI. They're expecting it to come in at 0.5, previously at 0.5. So they're not really expecting any changes here. But let's see an area right here. This is Bloomberg. It was just published just the other day, and it says U.S. consumers' outlook for inflation climbed to a new high last month. All right, but the area that I just found was right here, and this is the part that's concerning. And a lot of people keep asking, what's the expectations in regards to house values and rents and things like that? So let's focus in on this part right here. The data suggests that consumers anticipate more pain from current wave of high inflation before it eases. They expect home prices to rise 6% over the coming year, up from 5.7%. Expectations for year ahead rent growth edged up 10.2%, while food prices are now expected to increase 9.6%. So when it comes to inflation, and then it keeps trickling over to the housing market, there doesn't look like there's any ease in the future for that anytime soon. I just spoke with a young lady in Texas who is a realtor down in that area, and she actually informed me, and this was kind of cool, that they really don't have a huge inventory problem. They just have too many buyers. Well, also, if you look at it the other way, if there was more houses on the market, that would help what's the word I'm looking for? Appease the buyers. So any which way, we still have a high demand of people looking to buy homes. That's the facts, guys. So don't shoot the messenger. So now let's go over how all this is affecting the markets, especially the mortgage markets. So we go into and we start looking at what's going on with the MBS market. This is basically the biggest piece of the puzzle that we monitor to see what's going on with rates. Okay, so this is what's going on to the price. This right here is the price of a mortgage-backed security bond. All right, we focus in on this little number right here, and we hate red. Why? It's because when it's red, the price of the mortgage-backed security bond is going down. What that means with mortgage rates, they're going to go up. There's an inverse relationship. When the bond price goes down, the rate goes up. Okay, that's in its simplest forms. So that's a pretty big move. The other day, last Tuesday, I said, you know what? We had a +2 basis points that day. And I'm like, this is an anomaly right now, because every day we're seeing 30, 40, 60, 80. So this is a pretty big number going down. Let's see where mortgage rates started the day. Well, we go across here, and this is an article posted by Mortgage News Daily on a daily basis. You're more than welcome to go there and get this information. But what I try to do is provide you this information in the why. Why is all this stuff happening, especially mortgage rates going up, because of the economic news? So we start here, and we're going to go across the board. We start out at the 30-year fixed rates coming in right now, up 9 basis points, settling in at 5.06%. And again, guys, don't forget down here, to get that rate, it would cost you 0.4 in points. So if you equate this out, that rate's probably closer to 5 1/8 to 5 1/4. Okay, if you didn't have to pay any costs. Then you go over to the 15, it's 4.29, up 5 basis points. It also comes in with a cost of 0.4. Then you go over to the government loans that they post, and they don't put in here VA, but VA is very similar to FHA. So the government loans are coming in at 4.68, up 6 basis points. The 30-year jumbo is 4.35, up 5 basis points. And the 5-year ARM is flat at 4.05, and it is 1% lower on their sheets right now versus the 30-year fixed. We scroll up. We don't have to look at the chart because we know rates are going up and up and up and up. But what's the sentiment right now? It's bad. It's real bad. It's almost as far to the right as you can possibly get, and that's not good. Okay, so we go over to my charts. I'm going to be posting you some newsletters here shortly. There might be a glut of them, so I post every day, plus I post a weekend model, and I'll be posting that here shortly. I just posted this one, and this is a pretty intriguing post, and if you're in the market and you really want to dissect this information, I would highly suggest you check this out. It'll be being posted within the next half hour. But it basically tells you some parameters on where we feel that mortgage rates will be, why they're going to be there, and so forth. Guys, I'm not Nostradamus. I don't predict the future. All I try to do is, with all this information, at least give you guys the facts, and then you make the decision. So if you like my channel, and I hope you do, please, all I ask you to do is give us a thumbs up, subscribe down below. If you want to find out more about us, go to therateupdate.com. If you want to give us a call or schedule a meeting, all that information's right here. So God bless, guys. I'll be posting a video later today that I think you'll find very informative. So check it out. I'll see you later this afternoon. Bye-bye.